Good morning. We'll give everybody an opportunity here. Not a hell of a lot to talk about, but definitely some stuff. Disappointing trade deadline. Generally speaking, I mean, certainly if you're a Yankee fan, but I mean, there wasn't, it seemed like all, excuse me, the big deals were done days prior. Overnight, we're seeing Asia mixed, mostly up, Europe up, indicating up, big here on shore. Dow futures, NASDAQ up over a point, S&P Russell about a half, VIX down over 1%, sitting at about 15 and change, Bitcoin up a bit. Good news is, boy, and I mean, just the oil market has just been so volatile, right? Brent and crude both down 3-4%. Brent sitting at 81 and change, crude under 80 at 77. And, I forget, we didn't get anywhere near a 50 handle in crude, I don't think. A 1 month chart, yeah, we got like 67, 68, something like that. So, I mean, we are careening towards a sub 70 handle, which I think the consensus was a really great number. I mean, platinum, if you're long platinum, good day for you, up 6%. Dollar mixed against most other currency. What's going on? I get sort of no news out of the Middle East. I mean, there was definitely a little bit of back and forth. Something about, Trump's going to cause World War III, according to Iran. Trump saying a deal is imminent. My guess, just simply based on the price of oil, is that traders kind of believe Trump and don't believe Iran. Sort of had another night of no strikes, although there was a Greek ship, and I don't know exactly the timing of it, but there was a Greek ship that was hit sometime in the last 24, 36 hours. I'm not certain that it was in the strait. I don't know. The information that I researched on it to me seemed to be a little bit ambiguous. At a minimum, because they really didn't know where the strike came from, right? So, who knows? I mean, it's crazy as it sounds. There's still pirates out on the sea, and who knows who's doing what out there and what hit them. It was some sort of engine room fire. So, long and short of it is, that hasn't had an impact on the direction of oil and therefore bonds. We're up a tick or two across most MBS. Sixes in a little bit of a reversal of fortune. 6.5s and sixes really aren't gaining. We're seeing 5.5s being propped up a bit. And fives kind of following along. If you look at a 5-day chart, make no mistake, we're not at highs, but we are around sort of tradable highs on 5 and 5.5 coupon. Whereas sixes, I don't want to quite say we're mid-board, but we're in the vicinity. So a little less value in the 6 coupon, maybe a little bit more so in 6.5. But if you're continuing to chase a loser in the 5.25 to 6 1/8 note rate, you're sort of gaining on it. So therefore, what do? I don't mind if you kind of take it day by day. As I said yesterday, as long as you're careful, you've now won 2 days in a row. But keep in mind, 8:15 tomorrow, you won't have the ability to react. Let's talk about yesterday for a second. 10 o'clock did not help. A little disappointed by that, certainly. Construction spending, by the way, revised down and printed negative. That's bond friendly. ISM prices paid down month over month, 73 to 71, but better than the 70.3 we expected. And then headline, up and beat. Not a great number. We expected 54, came in at 53.3 last month, 55.6 this month. Car sales were pretty hot as well. So yesterday's data, a little bit of a reversal of fortune. And so what the heck does that have to do with the next series of data? Theoretically, nothing, but I don't like it because it didn't continue the narrative of weakening data. We've got jolts at 10 o'clock, and this is something that we've paid more and more attention to over the last year or so. Some other data at 10, but the headline is jolts. Does it give us a little bit of a precursor to non-farm? You want to say yes, but I mean, I've got to tell you, jolts and challenger layoffs, have been reasonably disconnected to non-farm and ADP. So, who knows? Right now, we're kind of celebrating oil. And, if you ask yourself, why aren't bonds rallying harder? Probably a little bit of a risk on trade. We've talked ad nauseum about the duplicity of the markets. It's like, well, okay, great. We think price of oil is going down, inflation's going down, rates are going down. But today we feel better about that story regarding stocks than we do bonds. And so, there's not, although sometimes it seems the opposite, there's not this infinite amount of money. So if you have to choose where you're going to put it, right now you're choosing stocks if you're the broader market. And that's hurting a potential bigger rally. What probably doesn't help us either, right? And this is where maybe bonds are on the tail end of this, is now if you get strengthening data, right, and cheapening oil, boy, that is a boon for stocks, because you're buying stocks into a better economy with less chance of inflation, at least near term, win-win. Whereas for bonds, okay, we think that inflation is in check, but the economy's better than we thought, right? And so I think that the story bonds want to be able to tell is end of conflict, and lower oil prices and slowing economy. We were telling that story up until a couple weeks ago on oil. We're telling it sort of again now. And to me, we were telling that story on the economy up until really this data. I mean, we've almost been unilaterally worse than expected on the data front. In terms of the overnight, for some reason, Yahoo Calendar not populating the results. We had a fair amount of data. Let me just do another search, see if I can find another calendar, maybe the trading economics one, which is mostly U.S., if not, they kind of really. What about CBS Market Watch? Yeah, I mean, those are really U.S. centric. So I don't know. I can't really report on today's data or the overnight data because Yahoo's not populating it, unfortunately. Sorry about that. So that's where we are. I would say I am approaching sort of a lock bias, depending on story, 5 1/4 to 6 1/8. Certainly if you took on a floater in the last week, you should seriously be considering a lock ahead of the data Wednesday, Thursday, Friday, and 10 o'clock does pose a risk today. If you are 6 1/4 to 6 5/8, 6 3/4 note rate, some of that value in that 6 coupon's gone. Believe me when I tell you, these aren't terrible levels. I think that, as always, discretion is the better part of valor. So I am not saying don't lock those note rates, but it's not the blue light special that we were on. And I do think that there's what we may be seeing, and I haven't been looking at levels. What we may be seeing is a little bit of a rotation out of sixes and into 6.5s, because it just seems like incrementally 6.5 coupon is holding up a little bit better than 6. So I think that you have a lock story 5.25 to 6 1/8, depending on when you took that float in. I think 6.25 to 6 5/8, 6 3/4 is 60-30, 60-40 lock, 70-30 maybe, mostly because of the risk profile of the next few days. And 6 3/4 and up, depending on what you see in your rate sheet today. If you continue to see a better price, I think that that's sort of full on lock at this point, just because there's just so much risk. Certainly any fundings in the first 2 weeks of August, goes back to you don't have the time to react. And if you are going to take on risk, I'd make it day to day, and I'd keep my eyes on the 10 o'clock data today, and make a real decision into the close, because you will have no time to react tomorrow. So there you have it. Thanks for joining live. Thanks for watching on replay. We're going to do 8:15 tomorrow. I'll be on a little bit before 8:15, probably 8:13, 8:14 to catch ADP. So try to jump on in the morning. Bulls and Bears make money. Pigs get slaughtered. Have a great day.